Ben Sullivan, Chief Investment Officer here at A Wealth Management, back for another edition of the monthly ChartWatch, this time talking about through July, early August. I know we showed this slide last time as well, but I mean, it's historically relevant right now. So looking at the Treasury yield curve, where the mortgage rates are at, the month over month changes, you're seeing just crazy changes when I look at, 30, 40, 50 basis points year over year, up 20, 25 basis points on the 10-year and 30-year month over month. I'm highest 30-year mortgage, I think, since like 2007. This is really an acknowledgement that the bond market is not buying what the Fed is selling right now. And they believe that there's inflation that's unaccounted for, baked in with the rising national debt, with some of the geopolitical things, with some of the lack of transparency that in the messaging that is likely to be forecasted and is being forecasted by our new Fed chair. The market is baking in a premium to that uncertainty, to that suspected inflation, and it's entering into a territory that is potentially disruptive as far as a economic stability standpoint. And that is being made more complex by a slightly weakening job market in the most recent numbers that we have. So it really is putting the Fed's dual mandate at odds with each other. I think it is a very significant, complex, and early test for our new Fed chair on what does rate forecasting look like? What is the expectation of a rate hike versus a rate cut? It's something that we really need to keep our eye on. With a equity market that is producing really strong, higher than expected earnings and revenue growth, as well as forward guidance, this is a really interesting sort of wrinkle to watch and sort of the key variable I'm paying attention to as I think through what advisors and clients and investors really need to be focused on when it comes to the expectations of portfolio performance, what could potentially stop this all else equal, relatively normal up into the right year for most of the major markets. So something to keep an eye on as we proceed forward in August. Thank you very much.